Our world today has been beset by crises we could not have anticipated 3 years ago. A global pandemic, large-scale supply chain disruptions, and a war in Ukraine. These crises have had, and are still having, devastating impacts, causing loss of life and economic upheaval. They have also impacted on public finances, as governments have taken steps to shield their citizens and economies from the worst effects. These challenges are taking place against a backdrop of high debt, limited fiscal space, and elevated uncertainty. We cannot predict what events may develop next year or the year after, but policymakers can structure public finances with resilience in mind. I'm Amanda Sayer.
And I'm Leslie Fisher from the IMF Fiscal Affairs Department. And we're here to talk about fiscal risks, what governments can do to better understand, manage, and prepare for them, and to share an IMF toolkit which you may find useful. And later, we'll be joined by Mr. Vishal Dev from the Finance Department of Orissa State in India, and Mr. Hamandishe from Zimbabwe's Ministry of Finance and Economic Development, who will talk a little bit about their own experience in applying these tools. Now, what do we mean by fiscal risks? These are all those factors that can cause government finances to deviate from what we expect. Events like pandemics, recessions, financial crises, climate change, or natural disasters. As many countries have experienced, the past 2 years have demonstrated how costly fiscal risks can be. Collectively, we've just been through one of the biggest shocks in a generation. The COVID-19 pandemic has had deep implications for global populations, economies, and public finances. In many of your own countries, you saw public debt rise to levels not seen before. In fact, the pandemic contributed to the largest one-year increase in global public debt in 50 years. This increase in debt was largely caused by an unexpected turn of events, or what we call fiscal risks. After 2 major crises, total public debt now stands at about 100% of global GDP, a level not seen since the height of the Second World War. And now, countries are facing new risks arising from the war in Ukraine, the displacement of people in Europe, and rising food and energy prices everywhere. At the same time, countries are also grappling with challenges posed by climate change, including an increased frequency and severity of natural disasters. We have also come to understand that it's not just extreme events like these that are a cause for concern. Fiscal risks that become reality occur with surprising frequency. Pressures can arise from volatility in commodity prices, impacting the cost of important goods in the budget, or decisions to bail out troubled state-owned enterprises, or calls on government guarantees. We also know that when it rains, it pours. In difficult times, one shock tends to trigger others, causing different risks to all materialize at once. IMF research has shown that on average, it seems that countries face a macro-critical event about once every 12 years, each resulting in fiscal costs of around 6% of GDP.
That's significant. It underscores how important it is that countries understand the nature and size of the risks they face and take steps to manage them. So what can governments do to better manage fiscal risks? First, they should identify their fiscal risk exposures and prioritise those that are most important. Second, they should try to quantify the magnitude of those risks as well as their likelihood of occurring. Third, policymakers should consider whether actions need to be taken to mitigate exposures, for example, by imposing caps on guarantee schemes or regulating certain activities. Fourth, governments can create fiscal buffers to accommodate risks. For example, some countries choose to include contingencies in their budget, for the costs of unanticipated events. Others have established stabilisation funds with dedicated assets on which they can call in times of crisis. And finally, it's important that risks are reported transparently. Disclosing known fiscal risks can help underpin credibility and send a signal that governments are not only aware of those risks, but are taking steps to manage them as well. And here the IMF's Transparency Code and Handbook provides useful guidance. At the same time, these practices should be integrated into the broader public financial management framework. That means integrating decisions into the annual budget process. This helps to ensure that policymakers are made aware of the expected costs of interventions when decisions are taken, and that those costs are included in budget planning. It also means factoring fiscal risks into the design of fiscal rules and ensuring systems are in place to monitor how risks may evolve over time. Our experience has shown us that countries which have sound risk management practices in place are better able to weather crises when they hit. Now, deciding which risks to focus on can be daunting. So where should you start? Well, the IMF has launched a new fiscal risk management portal, a one-stop shop where you can access our latest resources and tools. It includes a knowledge hub which brings together the IMF's guidance, latest research, and country examples. And a new fiscal risk toolkit which provides a practical basis to help countries identify, assess, manage, and disclose different sources of risks. The toolkit includes a number of Excel-based templates to help you identify your largest and most important sources of fiscal risks and to quantify their potential fiscal impacts. These tools can be tailored to match your government's capacities and your country's circumstances. The Fiscal Risk Assessment Tool is a good starting point for governments who are new to fiscal risk management. The tool is intuitive and contains a guided questionnaire on 14 fiscal risks to support your analysis, including macroeconomic, environmental, guarantees, and other sources. The tool helps you to better understand your risk exposure so you can prioritise your risk monitoring and management efforts. It also provides global and regional comparisons that may be useful in benchmarking your risk exposure. The Fiscal Risk Toolkit also contains several other tools to support more in-depth analysis of specific risks, such as state-owned enterprises, public guarantees and loans, public-private partnerships, and pandemics. For example, the state-owned enterprise tools can help you assess vulnerabilities and risks across the sector. The Health Check tool provides high-level analysis that can be used to identify those entities that may require closer attention, while the Stress Test tool allows you to dig a little deeper and assess the resilience of a particular entity under different scenarios and to quantify the fiscal costs that may arise. We invite you to visit the Fiscal Risk Portal, where you can download these tools and apply them to your own country's data and circumstances. The tools have been informed by the IMF's capacity development work with several countries. And we're fortunate today to have representatives from the Ministries of Finance of the Orissa state in India and Zimbabwe who will talk a little bit more about their experiences with two of the tools.
Orissa, a large Indian state, initiated their fiscal risk practices at the start of the pandemic in March 2020. You will hear from Mr. Vishal Dev, Principal Secretary for Finance, how the state has used the IMF tools to identify fiscal risks and develop a comprehensive report on their exposures and mitigation strategy. Mr. Vishal Dev, over to you.
Thank you, Leslie and Amanda. Hello, I am Vishal Dev, Finance Secretary, Government of Orissa in India. Orissa is a coastal state located in the eastern part of the country. It has a population of about 45 million and the size of its economy in financial year 2021-22 is approximately 86 billion US dollars, which is higher than at least 121 countries in the world as per IMF World Economic Outlook GDP estimate for 2021. The finances of the state were in a bad shape prior to 2005, with persistent dependence on ways and means advance and overdraft. In 2005, Orissa adopted a rule based fiscal policy through enactment of fiscal responsibility legislation and through strong fiscal correction measures. The state could achieve fiscal turnaround. Today, Orissa is considered a pioneer in fiscal reforms and governance in the country. Although the financial condition of Orissa has improved considerably, there are several areas which need further attention. The state economy is volatile due to dependence on commodity prices for mining revenue and exposure to frequent natural disasters, particularly tropical cyclones. Orissa is hit by tropical cyclones almost every year. The state government has to deploy resources for rehabilitation, resettlement, and reconstruction of critical infrastructure. During financial year 2020-21, the economic loss due to various natural disasters faced by Odisha was about 3.5% of our state GDP. It is against this backdrop that Odisha has undertaken fiscal risk analysis. We have put in place the required institutional arrangement for fiscal risk analysis, including a fiscal risk and debt management unit, PPP directorate, and fiscal risk committee to oversee and to provide direction. The PPP Directorate has been set up to compile all information related to total fiscal commitments and contingent liabilities concerning all PPP projects under implementation as well as those in the pipeline. Fiscal risk analysis includes risk identification and quantification, risk classification, risk reporting in the form of disclosure statement, and finally, putting in place apposite risk mitigation measures. We have identified all possible sources of risks such as macroeconomic, institutional risks emanating from PSUs, PPPs, natural disasters, government guarantees, etc. We also quantified risks as a percentage of the state GDP. Risk assessment is done based on its financial impact and likelihood of realization. Based on the assessment, risks are classified and put into a risk matrix. We are regularly updating the fiscal risk matrix, taking into account the recent developments. We are also maintaining a fiscal risk register to register all fiscal risks with qualitative analysis on fiscal impacts and the likelihood of occurrence. The state PSUs receive budgetary support in the form of equity capital, loans, and subsidies from the state government. It is critical for the state government to undertake strategic oversight, monitoring, and fiscal analysis of high risk PSUs in the energy and other sectors. The PSU risk analysis tool, developed with technical inputs from the IMF SAR track, has tremendously helped in analyzing the fiscal health of state owned enterprises. We are also using the Fiscal Risk Assessment Tool, FRAT, of IMF for fiscal risk assessment in Odisha. In fact, FRAT was piloted by IMF in Odisha. Adopting suitable risk mitigation measures is the ultimate goal of taking up fiscal risk analysis. Odisha has already put in place a number of risk mitigation measures. For example, recently we have decided to put in place a budget stabilization fund to cushion the state budget against both positive as well as negative shocks stemming from mining revenue. Fiscal risk reporting is critical for ensuring transparency and accountability. Public disclosure about various risks and risk mitigation measures adopted by government enhances the credibility of the state. We have published a fiscal risk statement along with the annual budget for financial year 2021-22. We are planning to bring it out every year along with the annual budget. During the COVID-19 pandemic, we adopted scenario analysis such as the best case, the most likely case, and the worst case to estimate resources, which helped in critical decision making regarding borrowing and prioritizing our spending. The way Odisha managed its finances during the COVID-19 pandemic earned many accolades and is a testimony to its sound fiscal practices. The Reserve Bank of India, which is a federal bank, in its state finances, a study of budgets of 2020-21, has recognized fiscal risk management in Odisha as a best practice in financial management in the country. Nevertheless, we have just started the practice of fiscal risk analysis. We still have a long way to go. The real challenge is to keep it sustainable. Fortunately, Odisha is led by a visionary political leader who accords top priority to strengthening our public finances, and this gives us the motivation and direction to undertake such activities. In future, Odisha will continue to keep working on fiscal risk analysis and will strive to adopt more such international best practices, which could further strengthen our public financial management system. Thank you.
Thank you, Mr. Dev, for sharing the experiences of Orissa State in undertaking fiscal risk management. I wonder if I can ask you a quick question. What would you advise a country that is new in fiscal risk management? Where do you think they should start in order to instill this practice?
Leslie, to me, identifying and prioritizing risks and having dedicated institutions in place like a unit responsible for macro fiscal data and data for state owned enterprises and PPPs should be the starting point. Once these things are in place, they can go for analysis and preparation of sectoral risk registers. An overarching fiscal risk committee would then be useful for overall policy guidance.
Thank you very much, Mr. Dev. That was really useful, and I'm sure it would be very practical advice for our audience based on your experience. As you have seen from this example, the toolkit has wide applicability and can be used at national and subnational levels.
The fund has also been working with Zimbabwe to provide training on fiscal risk analysis using various tools. The analysis has been used to inform decision makers of potential risks and to strengthen disclosure, with Zimbabwe publishing its fiscal risk statement for the first time in its 2022 budget. Mr. Hamandishi, the Director of Economic Policy in the Zimbabwe Ministry of Finance and Economic Development, is joining us today to tell us about their experience, the progress they have made, and some of the lessons learned.
Hello, Amanda and Leslie, and thank you for having me today. Let me start by saying that Zimbabwe, like other countries, is quite vulnerable to a number of macro fiscal shocks. And you have already mentioned some of them, to include the COVID-19 pandemic, natural disasters in the form of droughts and floods, supply chain disruptions, revenue flows, and expenditure pressures. These are just a few. And these shocks are becoming more and more frequent and undermine the attainment of macro fiscal objectives relating to stabilization and growth. Then the question is, what are we doing about it? The Ministry of Finance has set up a macro working group, what we call the MWG, and this group comprises of experts from the various ministry departments, the central bank, and Zimstats. This is a team that technically develops our medium-term macro fiscal frameworks. During formulation and upgrading of these frameworks, this specific team pays close attention to potential macro fiscal risks which may arise during the course of the year, causing deviations from targets and hence objectives. Allow me to share with you our experience in managing risks or fiscal risks. Zimbabwe as a country has so far produced 4 fiscal risk statements with joint support from IMF Afritac South and FAD, IMF FAD. This cooperation dates back to 2018, although it was ad hoc before then. I therefore want at this stage to acknowledge the support and assistance we got from Afritac South and IMF FAD team. And I will just name a few of our cooperating partners or individuals. Here I'm talking about Camilo Gomez Osario, I thank you. Jot Raman, I thank you so much. Sib Hilda, I thank you so much. Jason Harris, I thank you so much. Richard Hughes, Eileen van der Linden, and Brian Wilhelm. I thank you all for your support and assistance. In our relationship, each year we would agree on at least 2 missions, usually before the mid-year fiscal review and just before preparation of the annual budget. The objective was to link the capacity building process to the main policy formulation processes of the country, namely the in-year policy statements, the mid-year, the budget strategy paper, and the annual budgets. This, therefore, linked training to practice and took advantage of actual Zimbabwe data and assumptions. Hence, the fiscal risk statements we produced actually provided a fair and realistic overview of fiscal risks in Zimbabwe. And now allow me to talk a bit on the fiscal risk statements we have so far produced. Of the 4 fiscal risk statements which I mentioned earlier on, 2 were produced in June 2019 and another in December 2019. Then the 3rd was actually produced during the end of 2020. Although these statements were not published as standalone publications, they were actually used to guide various macro-fiscal policy decisions and policy pronouncements during the respective periods. These include the year state of the economy statements, the budgets, the mid-years, and so forth. And just to make an example, the June 2019 fiscal risk statement actually guided the 2020 national budget statement. What was the idea behind it? The idea was to gradually improve on these statements before their publications and also prepare the public and all other stakeholders on such important statements. Having done all this work, I think the next question would be, are you happy with the results so far? Yes, indeed. Through cooperation with the IMF FAD and Afrotech South, we have gradually built requisite analytical capacity, better understanding of fiscal risks, and capacity on preparedness to mitigate these risks. The IMF Simplified Assessment Tool, the Toolkit, and the portal, and indeed the physical, or in some cases virtual, presence of mission experts are indeed quite useful resources in the whole capacity development exercise. I won't go into details of the technical work we have covered so far, but can confidently confirm much improvement in our understanding of fiscal risks and the respective analytical capacity we have built with FAD and Afrotech over the years. As evidence of this capacity improvement, we have managed to come up with our first fiscal risk statement publication of November 2021 for the 2022 national budget. Let me say a bit about the 2022 fiscal risk statement which we published. This statement provides an assessment of risks and identifies measures to mitigate them. These covered implications on growth from risks such as COVID-19, natural disasters, power supply, inflation, exchange rate pressures, international commodity prices, and other budget-related pressures, such as the wage bill. These risks were ranked, analyzed, and quantified through simple simulations or models, and a number of specific and quantifiable mitigatory measures were recommended. This was a major positive step which has received quite public interest, and we hope to continue with this work. As a way forward, I want to emphasize that the cooperation between the ministry and the IMF will continue. And we already have got a program which extends the analytical work from what we have been doing to areas such as state-owned enterprises, local authorities, and others. But let me also emphasize that we already have emerging risks from geopolitical developments. Here I am referring to the conflict between Russia and Ukraine. There are quite a number of risks arising from this development, and we would be quite happy to get some assistance from the IMF in this area.
Orissa, it's really great to hear that your fiscal risk analysis is informing the budget. Based on your experience, what are some of the lessons that you've learned going through this process that you think would be useful for other countries who are looking to strengthen their fiscal risk management?
First, the field of risks is quite complex than we imagine, and therefore it may assist to be quite patient in the whole capacity building process and avoid piling up issues and rushing to publications. Rather, build step by step the requisite capacity as well as public trust and confidence. And second, of course, information disclosure or risks disclosure is quite essential in order to get public trust. And we have prioritized fiscal transparency is integral to the risks management process, and this is vital for confidence building. I thank you.
Thank you, Mr. Dev and Mr. Hamandishe, for sharing your experiences. These are just two examples of how the fund is working with countries to build capacity and strengthen fiscal risk management. Indeed, over the past year, the IMF's Fiscal Affairs Department has worked with more than 60 countries to strengthen fiscal risk management practices. That support has been made possible by our many capacity development partners. We are confident that the IMF's portal and Fiscal Risk Toolkit can provide the tools you need to help strengthen fiscal risk practices in your countries. If you have accessed the portal and used the tools, we welcome your feedback on their usability or usefulness at the email on your screen. So what have we learned? We know that many countries' budgets are strained and that they have limited fiscal space. Fiscal risk management should therefore be integral to public financial management. We also know that fiscal risks are already elevated and we face an uncertain period ahead. We don't know the timing and magnitude of the next big event. What we do know, there is a high likelihood that something unexpected will happen. If we have learned anything from the past 2 years, it is this. If you take action to better understand and manage your risks today, you will be more prepared to withstand shocks in the future. To quote a well-known author, there's no harm in hoping for the best as long as you're prepared for the worst.